Chegg CEO Dan Rosenzweig joining me from the floor of the New York Stock Exchange post-earnings, and you beat estimates for the quarter.
We did. We've had a great first half of the year. We beat them in the first quarter, we beat them in the second quarter, and we raised our guidance for the second half of the year. Transition to digital is going even faster than we expected, so right now things look great.
All right, let's talk about digital. Digital revenue up about 62% in the last quarter. What's driving that growth for you?
Well, we're seeing all the elements of digital actually increase quite nicely. We think we're at the beginning of all the businesses, but our subscription businesses are going extraordinarily well. We have our Chegg Study, which is our homework product. We have the new product in Chegg Tutors, which is growing exponentially. So right now, all those elements are growing really strongly.
And in fact, you released a stat that 70% of the people who use Chegg, it's not about textbooks.
Right. Yeah, no, it's very interesting because 5 years ago, that's all we could do. And 4 years ago, we didn't even have a penny of digital business. Now this year, we're predicting between $137 and $145 million worth of digital. So direct to consumer is a really powerful business model for us, and students are beginning to know us more for things other than textbooks because they're using homework help, they're using our internships, they're using our college search, they're using our career placement offices and our tutoring. So we just keep expanding the services, and they use us for things much more than they have in the past.
So are the margins better for those businesses because you do see rising gross margins?
Ron, it's higher growth, higher margins, and no longer using cash. So we're going from a company when we were in the textbook business that used cash to a company this year that's producing cash. So it's much better business model, much simpler business model, and much higher growth. And our gross margins are expected to be in the 65% range, so this is a great business.
So who do you consider your main competitors now as you continue the move to digital content?
You know, we're like a little bit in our category, in the education category, which is a $1 trillion category, like LinkedIn is in theirs, or Facebook is in theirs, or Netflix, which is we're building a new category, which is a student-first hub, focused exclusively on the needs of students, high school students and college students. Now we might on a point-by-point basis compete on textbook rental with the local bookstores or Amazon, or some of our tutoring products with offline, but collectively using the platform, the reach, the brand, the scale, nobody's building that business but us.
In terms of subscriber growth, about 200,000 new Chegg customers in Q2, a lot more for digital. When do those numbers decelerate a little bit? You'll have the law of averages against you at some point, I would think.
Yeah, we're very early. So we reach now already 50% of all college students are in our network. 75% of all high school students who intend to go to college are in our network. But we will expand longer distances. We're bringing out test prep, which we think will help us get into sophomore and juniors in high school, not just seniors. And we're expanding into the career area. So the amount of students we can reach and the length of time that we can reach them is just going up.
All right, I'm asking this question on behalf of every kid who has to buy a college textbook or rent one. Yeah. Why are they so expensive?
Because they're for-profit companies that are selling them. And so here's what happened. The publishers would pay for the rights, they would print textbooks, they would try to recoup those, and then they would sell to a wholesaler who marked it up 30% to the bookstore, who marked it up 30% to the student, and that was just ridiculous. So the rental model took all those other middlemen out. We took the risk by owning the textbook, we created a brand new model, and now you can rent a book for as little as $35 that used to cost you $200. We've saved American families $500 million that they can go back into their own lives, their own education, their own homes, so we're really excited and proud of that.
Dan Rosenzweig, great to talk to you. Thanks so much.
Thanks so much, Ron.